In the world of corporate finance, a single typo, one misplaced decimal point, can literally cost billions. An entire company's reputation can just crumble. For decades, we've relied on human auditors to find these tiny needles in a massive digital haystack. But what if there's a better way? Today, we're diving into a huge question. Can AI finally find that trillion-dollar typo? And if you think that sounds like an exaggeration, it's really not. These tiny, seemingly harmless accounting errors, when they're left unchecked, they can multiply. They can build on each other until a company's financial reports are basically pure fiction. And when that happens, investor confidence is shattered, and in the worst cases, the entire company can just go under. This isn't just about numbers. It's about the fundamental trust that holds our whole economy together. So if the stakes are so ridiculously high, why are these errors so hard to catch? Well, it's because auditors are facing that classic needle in a haystack problem. And that's exactly where we're going to start. I want you to just picture this for a second. A big corporation's accounting system is processing this absolute tsunami of transactions every single day. We're talking millions of them. For a human auditor, trying to sift through that ocean of data to find just a handful of critical errors, it's like trying to find one specific grain of sand on a beach. It's a nearly impossible task. For years, the only solution we had was sampling. You check a small, random handful of transactions and just hope it gives you an accurate picture of the whole thing. But that is such a dangerous gamble. It creates this huge risk of what's called a false negative. Basically, you check a sample, it looks totally clean, so you give the all clear. Meanwhile, the complete set of books is actually a ticking time bomb. And those are the mistakes that snowball into absolute financial catastrophe. So if humans are struggling to search that whole haystack, what's the alternative? Well, that brings us to the hero of our story, a new kind of tool that we can think of as the AI detective agency. Okay, so let's get into what this actually is. The specific tool is called a Random Forest Classifier. Now, I know that sounds complicated, but don't let the name throw you off. The keyword to focus on here is ensemble. This isn't one single AI brain trying to solve the puzzle. It's a whole team of them, all working together. And the way it works is just like assembling an elite detective agency. Instead of relying on one single investigator who might have a blind spot, you bring in hundreds. Each of these detectives, which in the AI world is called a decision tree, looks at all the financial evidence from a slightly different angle. Then they all cast a vote. Is this transaction an error or is it clean? The majority vote determines the final verdict. And this method, it dramatically boosts accuracy and cancels out any single detective's mistakes. Okay, so that's a really powerful idea in theory. But the big question is, does it actually work in the real world? Well, researchers developed a super rigorous framework just to find out. Which brings us to our next section, putting the AI to the test. They built this really systematic 5-step audit plan. You can see it right here. It's a super clear roadmap. First, you feed it the raw financial data. Then, step 2 is pre-processing. That just means cleaning it all up, making sure it's consistent. Third, you unleash the AI detectives to analyze everything. Fourth, the AI's findings get all neat and organized. And then finally, and this is the crucial last step, a clear report gets handed over to the human auditors. See, it's not about replacing people. It's about creating this perfect partnership between machine speed and human judgment. All right, so the framework is in place, the data is loaded, and the AI detectives are officially on the case. So, what did they find? Let's take a look at the AI's report card. First up, the AI was tasked with a classic job: find every single customer who had gone over their credit limit, a major red flag. The result? A perfect score. It found all 10 of them. It missed absolutely nothing. Okay, next up, they had it hunt for unmatched accounts, which is a telltale sign of sloppy manual data entry. And, you guessed it, another flawless result. It caught all 15 problem accounts, no problem. But here's what might be the most impressive result of the whole thing. The AI wasn't just amazing at finding problems, it was perfect at confirming what wasn't a problem. It correctly gave the all clear to all 51 accounts that were in good standing. And this is so critical. It proves the AI isn't just an alarmist, crying wolf. It doesn't generate false positives, and that saves human auditors just countless hours of wasted time. So an absolutely perfect record. Across the board, this is pretty incredible stuff. But it does beg the question, how? How did the AI know what to look for? This is where it gets really smart. The AI didn't just find the errors, it actually learned how to find them. The researchers could look inside its brain and see what clues or features it paid the most attention to, and the results were crystal clear. The single biggest predictor of an error was the customer's credit limit. The gross amount of a transaction was a distant second. In other words, the AI basically taught itself what a seasoned human auditor's gut instincts tell them. It learned exactly where to look for trouble.
So, a perfect score and an intelligent learning process. What does all this mean for the bigger picture? Well, that brings us to our final section, the future of financial trust.
The most crucial point here is that these AI findings aren't just abstract data points. They translate directly into real-world actionable steps. So when the AI flags an account that's exceeding its credit limit, it points the human auditor toward a likely root cause, like poor internal controls, and gives them a clear action: go review and tighten those credit policies. It turns raw data into a powerful diagnostic tool. And that really brings us to the single most important takeaway from all of this research. The goal here is not to replace human expertise with some cold algorithm. It's about creating a powerful partnership. It's about empowering human auditors with a tool that can scan the entire haystack, find every single needle, and then point them exactly where they need to focus their incredible skills and judgment.
This technology is poised to completely redefine what financial integrity means. But it leaves us with one final and pretty crucial question for the future. As these algorithms get closer and closer to perfection, who will we ultimately trust more? The seasoned human expert or the flawless AI that guides them?